Greetings, members, one and all of the Salivation Nation. Gold and silver have been crushed. Guess who is celebrating? Let's explore. Let's take a look. Here are the prices. Let's watch them move here. Boom! Yes, down dramatically. All the metals have been hit hard over the last day. It was a fairly substantial dip yesterday, but today they are reacting even more dramatically with a drop of gold over $37. It was up over that, or more than that earlier, over 2% drop. Silver got crushed hard, a dollar drop over almost 3.75%, 3.25% drop. And platinum fell $56. Palladium got just pummeled. Well, now below $2,600. It's at $2,580, $2,580. And even rhodium got smacked down a bit too. Almost a $2,000 drop in rhodium. So very, very interesting indeed. So why did we see this nearly $100 drop after the Fed shaked up the markets? And this is an article from Kitco News. We saw in just 24 hours, as reported here by Anna Golubova, gold managed to lose nearly $100 after the Federal Reserve signaled higher inflation and updated its dot plot projections, showing a possibility of 2 rate hikes as soon as 2023. So there's some mixed signals here. In fact, we got some revised employment data as well that is not looking good. So I thought maybe we'd see the prices for gold and silver maybe rebound from yesterday. That did not happen. It just shows you how fickle these markets are for sure. So this news triggered a surge in the U.S. dollar and a rise in the 10-year U.S. Treasury yield, which weighed heavily on gold and also silver. The precious metals plunge was intensified by technical selling as gold tumbled below the $1,800 level and came close to testing critical support at $1,770 to $1,760. The market zeroed in on the upward revision to the PCE inflation forecast for 2021, which was raised a full percentage point from 2.4% in March to 3.4%. You heard me report on that yesterday. During the press conference, which followed the Fed statement on Wednesday, Fed Chair Jerome Powell tried to reassure the markets that the central bank's dot plot, which showed that the 2 rate hikes are possible as early as 2023, should be taken with a grain of salt. So there you go. So anything is possible here. We're just kind of flying by the seat of our pants. It sounds like is what the Fed is saying. They really don't know what they're doing. He stated, "We did not have a discussion whether a lift-off is appropriate at any particular year. It's too early to talk about that." Well, then why mention it at all? Why mention earlier, especially when the pandemic hit, that it's definitely not going to be until after 2023 when there's going to be a rise in interest rates? And why mention it then if it's too early to talk about it now? It was too early to talk about it then. He also reiterated that the Fed does view the spike in inflation as transitory, making comparisons to the surge in lumber prices, which are now settling down a bit. He said over time, these things driving up inflation will be temporary. The experience with lumber prices is illustrative of this. Prices that have moved up really quickly because of the shortages and bottlenecks should stop going up, and in some cases should actually go down. And we did see that in the case of lumber, he said. Our expectation is that these high inflation readings that we're seeing now will start to abate, and it'll be like the lumber experience. Now, I've even made mention that that could possibly play some part in the price increases. But there's one thing that's for sure: inflation is up higher than normal, as they are and they have been predicting it and up their projections. which kind of flies in the face of this statement. The market has already made up its mind, viewing the Fed's June announcement as surprisingly hawkish, which is why gold suffered. The biggest surprise was that the median dot plot now sees 2 hikes in 2023 versus none before, said BBH Global Head of Currency Strategy Win Thin. We also got a shift for 2022, but not enough to change the median, with 7 now seeing a hike next year versus 4 in March. For gold, the market's reaction spelled out bad news. And this is going to lead us to who is kind of celebrating some of this stuff, why these prices are down. There's 2 groups. I'll get into that here momentarily, but let's first digest why the markets went down today. Transitory and hikes don't mix, said strategists at TD Securities, yet the Fed's dot plot provided a clear signal for a change in tone, with the median showing 50 BP of tightening by mid-23. The FOMC showed its hand, while the Fed has continued to reiterate that the strength in inflation is transitory. The officials' formal assessments of risk tilted strongly to the upside, with participants uncertainly assessments for core PCE inflation rising notably alongside the risk weightings to core PCE. Gold's significant pullback was room to run as speculative and physical flows slow, TD Securities added. And that just did. A lot of this sell-off was in technical, or in other words, in ETFs and the like. People aren't selling their gold, that's for sure. I don't think you were seeing people do that. Their physical gold holdings. If inflation turns out to be truly transitory, the Fed should be happy to walk the hike signals back. Unfortunately for gold bugs, the underlying inflation trends will remain distorted for months, which removes the immediate impetus for buying the yellow metal. And that's just it. There's so much distortion, and we see that too with how they measure inflation now, the Consumer Price Index, and then we have the PCE as well, and how they used to do it in the past. I think that Shadow Stats tracks all that stuff. We really have higher inflation than what they're telling us. Some analysts, however, view the drop in gold as excessive, especially considering that the precious metal already walked back some of its price gains in the days before the Fed's announcement. In other words, they kind of saw this coming to a degree, and it's baked in. That tells you about psychology. Psychology cannot be undermined, and it cannot be predicted, and it cannot be underestimated as well. Admittedly, the combination of a noticeably firmer U.S. dollar and higher yields poses quite a burden for gold. Whether it justifies a price slide on the scale is another matter. However, after all, gold had already fallen in recent days in anticipation of a possible change in direction on the part of the Fed, said Commerce Bank analyst Karsten Fritsch. Rate hikes in 2 years' times are too far off to warrant any such slump in price, especially as yields are well below the expected rate of inflation. So there is where that is, and you can see that big drop here and where we are at. And what usually happens whenever there's a dramatic move, well, typically that means that it's going to dramatically move the other way. So let's talk about the first of 2 groups that are celebrating this crushing of gold and silver, and that's going to be major media. That's right. CNN Business we're looking at right here. The Federal Reserve surprised the market on Wednesday with projections that future interest rate hikes will come a bit sooner than expected. Gold bugs in particular were disappointed, and while they kind of celebrate, the price of gold fell 4% on Wednesday and was lower again Thursday, falling below $1,800 an ounce for the first time since early May. While it's true that gold often rises along with inflation fears, Wall Street may have already priced in this scenario. Investors appear to be selling gold now due to expectations that the Fed is taking the threat of inflation more seriously and may move more aggressively to tamp it down. Well, I don't think they're taking it very seriously, and that just goes to show you their lack of, I think, understanding of the Fed. You know, they talk about this big toolbox that they've got in order to make things better for us economically, but what else do they have other than just increasing liquidity and raising or lowering interest rates? Higher rates would be bad for gold, which would lose its luster compared to other assets, including bonds, that tend to benefit in a rising rate environment. And even as such, you think about it, how little this makes sense is that they're calling for this to happen in 2023. That's 2 years from now. Sometime then, a lot could happen between now and then. I would venture to guess a lot will happen between now and then. And Jerome Powell even said it's too early to tell. Prospects of a further rise in yields should capture the upside potential of the yellow metal despite the rising inflationary pressures, says IPEC Ozarakaya, senior analyst with Swissquote, in a report Thursday. And it talks about how they interview other people and talk about taper tantrum that took place in 2013, and said that less attractive interest, the price remains below $1,800 an ounce, the yellow metal could be vulnerable to an intense sell-off, is what they're saying. Well, I tell you what, you may see that for some in the markets that are buying ETFs and are getting a little bit nervous about gold, perhaps. But you know what? For those of us holding the physical, well, we will hold on. Same thing with silver. But that is psychology, exactly what it is. And we're seeing gold miners, Newmont, Anglo Gold Ashanti, and Barrick were lower Thursday morning too. But I think that's a good opportunity to get in those areas, a buying opportunity for sure. Warren Buffett has soured too. Berkshire Hathaway disclosed earlier this year that it sold its entire stake in Barrick after first making the investment last summer. He didn't hold very long to that, but I think it just goes to show you, this is where we're at. And so that is kind of CNN business. I kind of take this article as they're, saying, hey, see, I told you, gold bugs. You thought gold was going to go to the moon, and silver too. Look what's happening now. It's suffering now. And we got a Democrat president in office, and we're using Keynesian policies. But you know what? This has happened before. We've seen this before. And so therefore, the next group of people, other than media, certain mainstream media sources celebrating this, saying, see, I told you so. Well, it's those of us who see this as a buying opportunity that we will capitalize on, because we know that if anything's transitory, it is these low prices or lower prices. But, you look at where we're at. Will we see this again tomorrow? We'll find out. We'll certainly keep an eye on it. It'll be very interesting to see, but typically whenever there's a massive sell-off like this or drop, typically there's a recovery period too, and it snaps back. And that being said, we're further away from my predictions that I made earlier in the year, and considering where I think things are going, I'm going to stand by my predictions for the end of the year. And we'll see what happens. It could be wrong, but we'll find out. To me, this is a buying opportunity. So you have those of us who see it in that regard celebrating as we hold for the long term, and we see this as a buying opportunity. And then major media who is saying, see, I told you so. Gold and silver, hey, they are not these safe haven assets that you think they are, because they're dropping so much. But you know what? They can only drop so much, even though they've dropped pretty dramatically. There's going to be a floor somewhere along these, because they are wealth preservation devices, and we will see that through some of these volatile times. Let me know your thoughts in the comment section below. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.